All right, let's talk UiPath. Their Q3 numbers for fiscal 26 are out, and honestly, they're a pretty big deal. We're seeing a major shift here. They're moving from just being a high-growth, kind of volatile stock to something much more stable, a profitable, durable automation powerhouse. So let's dive in and see exactly what's going on. So first things first, right off the bat, a really solid beat. You see this number? 4.7%. That's how much they smashed Wall Street's revenue estimates by. It's a huge signal that, they're really firing on all cylinders right now. And you know what? The market loved it. I mean, they absolutely took notice. The stock jumped over 9% in the week after they announced. So what was it that got investors so excited? Let's get into the nitty-gritty. Okay, let's look at the headline numbers. And really, this was a decisive outperformance. There's just no other way to put it. This was a clean, strong quarter that beat expectations pretty much everywhere you look. So let's just walk through this. Look at the revenue, over $411 million. That's up 16% from last year and way ahead of what analysts were predicting. Then you look at the bottom line, non-GAAP EPS, a huge 45% jump. Just wow, they crushed it there. And the really important one for a business like this, annual recurring revenue, or ARR, is up a very healthy 11%. That ARR is the lifeblood of their subscription model, so seeing that kind of growth tells you they've got some serious forward momentum. But here's the thing. Those headline numbers, they're great, but they don't even tell the whole story. The real story, the big takeaway from this quarter, is a fundamental shift in how this company operates. We're talking about a move towards real, sustainable profitability. And this right here is the headline within the headlines. For the very first time, UiPath had a GAAP profitable third quarter. So why is this such a big deal? Well, for a tech company that's been all about growth, hitting actual by-the-book GAAP profitability, that's a massive milestone. It's not just adjusted profit anymore. This is the real deal. It shows they've got their operations dialed in and that their business model can spit out actual cash. And the proof is right here in these numbers. They added $59 million in brand new recurring revenue, so they're still signing up new customers at a great clip. Even better, look at that dollar-based net retention, 107%. What that means is their existing customers are spending more money with them, 7% more on average. That's fantastic. And then you see that non-GAAP operating margin hitting 21%, which is just incredibly strong. It shows how efficient they're becoming. So the takeaway is simple. This isn't just growth for growth's sake. This is profitable growth. Okay, so the numbers look great, but the big question is, how are they doing it? And that brings us to their core strategy, which is all about this idea they call agentic AI. It's really their plan to become the brain, the central control system for automation across a whole company. And the CEO, Daniel Dines, really nailed it with this quote. He's saying, customers want one place, a single unified platform that can handle everything. We're talking about the old school, rules-based automation and the brand new, super smart AI agents, all working together. The vision is to be the one system that orchestrates and governs the whole shebang. So what on earth is agentic automation? Let's break it down. Think of the old school automation, what they call deterministic, like a factory robot. It does one task perfectly over and over. It follows the rules. Agentic automation, on the other hand, is like giving that robot a brain. It's an AI agent that can think, adapt, and figure out tricky situations on its own. UiPath's whole game plan is to bring these two worlds together on one platform. That way, a company can use the simple robot for simple jobs and the smart AI for complex ones, all managed from one place. And get this, they are not trying to do this all by themselves. Just look at who they're partnering with: Microsoft, OpenAI, Google, NVIDIA, Snowflake. It's a who's who of AI. They're playing it smart, positioning themselves as the Switzerland of enterprise AI. They're not trying to build a better AI than Google. They're building the platform that lets you use Google's AI and OpenAI's and everyone else's safely and efficiently inside your company. They want to be the central hub, the nervous system that connects all these different AIs together. All right, so with that kind of execution and a really smart strategy, it's no surprise that management sounds pretty confident about the future. Let's take a look at their guidance for Q4. Okay, so here's their Q4 forecast compared to what the analysts were thinking. The midpoint of their revenue guide is just a tick above consensus. Now, it's not a huge blowout, but it's a solid signal of confidence. But the really important number here is that non-GAAP operating income, they're guiding to around $140 million. That tells you that the awesome profitability we just saw in Q3, that wasn't a fluke. This is the new normal for them. And you can really see what that looks like on this chart. It puts that growth into perspective. Look at that jump from the 411 million in Q3 all the way up to their forecast of around 465 million for Q4. That's a really strong step up from one quarter to the next, and it shows they're on track to finish the year on a very high note. Okay, so we've looked at the quarter, we've looked at the strategy, and we've looked at what they're saying about the future. Now, it's time for our take. Let's put it all together and figure out what this means going forward. Which brings us to the big question, right? What's the trade here? After a quarter this strong, what do you do? So first, let's talk about the results for next quarter. Our call is that they're going to meet or even beat their Q4 guidance. The sales momentum they have is very real. And even though the new AI stuff isn't bringing in tons of cash just yet, that whole agentic automation story is definitely helping them land bigger, more important deals for their whole platform. And what does that mean for the stock price? Well, we think the stock is going to continue to get re-rated higher. Basically, investors are starting to see UiPath differently. The story is changing from this is a risky up and down automation company to this is a stable, profitable AI platform. And that second story, that's a story that investors are willing to pay a lot more for. So when you put it all together, the great execution, hitting that huge profitability milestone, their smart AI strategy, and a confident outlook, our rating on the stock is outperform.
And finally, the standard reminder, this is not financial advice. Thanks for joining us for this breakdown, and we'll catch you on the next one.